Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the latest earnings report of 3 Canadian companies in the financial sector that I personally own. These companies are Equitable Group, Brookfield Asset Management, and POW Corporation of Canada, and they reported their earnings and future plans yesterday and today. I start with Equitable Group that I recently started to buy its shares and add it to my portfolio. Equitable Group share price dropped heavily in the last few weeks, and in my opinion it is undervalued at the moment. Let's review Equitable Group earnings report highlights, which they called it their best ever quarter of earnings. Q1 reported earnings increased 27% year over year and adjusted earnings 34% year over year. Q1 reported diluted earnings per share 27% increased, adjusted diluted earnings per share 33% increased. These are great numbers. They also have huge growth in every single aspect of their business. They also had excellent guidance for the future growth in the next quarters, and it seems this growth rate will continue in the whole year of 2022. Finally, they announced another dividend hike by 4% quarter over quarter, which was really great. Overall, they had an amazing earnings report, and while in terms of the stock price I am down at the moment with Equitable Group, I'm a happy share owner at this point because I know the future is bright for Equitable Group when market conditions goes back to normal. Now let's move to the second company in my list, which is POW Corporation of Canada. Let's review their earnings report highlights. Unfortunately, it wasn't a great earnings report. They reported a lower earnings compared to the 2021, 70.1 cents per share in 2022 compared to 82 cents in 2021. Furthermore, their net asset value decreased from $52.6 to $49.9 in the first quarter of 2022. They missed their growth targets, and I can anticipate the market will not like this, and POW Corporation stock is probably going down again. If we look closely, while most sectors of POW Corporation business performed well and see a good growth, we can see that GBL and their alternative assets investments are two sectors that heavily underperformed and caused this decline in overall earnings per share of the company. While this quarter was really disappointing, I still believe in the company and management in the long run. As such, if POW Corporation shares continue to fall significantly, I would be a buyer of a stock again and will probably double down. Finally, let's look at Brookfield Asset Management earnings report, which was a mix of good and bad. They call this report an outstanding first quarter, but I don't think it was outstanding in all aspects. The good part is that EPS number and total revenue is increased year over year, and the management is optimistic about the future of their business and capital markets. They had a continuous success in fundraising and acquiring cheap assets around the world, and they are in the process of monetization of new assets during 2022 and beyond, which potentially leads to higher operating income for the company. They will also list their asset management business as a separate entity on the stock market, and 25% of the business will be distributed to shareholders tax-free by the end of the year. The main reason for this move is inside their earnings report. They mentioned, looking forward, we believe that each of these businesses has incredible potential to expand further. To achieve this growth, however, we have concluded that they should be separated while preserving the benefits of their complementary nature and alignment. So they did this before in the past with their real estate business and also renewable energy business, and they try to basically separate their different sectors, different part of the business as separate companies. I believe it's a good move to separate the businesses under Brookfield umbrella, and overall it will benefit shareholders in the long run. However, the bad part about their earnings report is some of the actual numbers in this quarter. Their funds from operation and distributable earnings, which are two of the most important numbers for a company like BAM, was down compared to the last year. And I don't think the market will react positively to these numbers in the short term. In summary, I think Equitable Group crushed the earnings with great growth numbers and EPS numbers. POW Corporation had a bad earning with negative growth in only a few aspects of their business. And Brookfield had a mixed earnings with not so great numbers, with bad numbers basically, but a promising future. What I would do with my shares in these three companies? Okay, I will continue to hold and add to all three positions during this market correction crash. I believe in all these three businesses, and I'm sure they will continue to perform well and grow their business in the future. Never worry about the share price of any company as long as you didn't overpay for the company, and if the business itself doing well, I mean generating consistent income and cash flow. The share price will eventually catch up to the fundamentals of the business, so don't worry about that at all. And I'm not worried at all about the current share price of these companies. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for Canadian banks' earnings report to hopefully cover those as well, but until that time, I see you guys in the next video. Farewell.